Welcome to Doors by Donovan, hosted by one of the co-founders of publicly traded Renters Warehouse in Arizona, creator of My Investor and My Rent Door. Here is your property management ninja, relationship coach, founder and host, Donovan Reese.
Hey friends, it's Donovan Reese, your host of Doors by Donovan podcast. Excited to be back today. I want to do a couple of things here on the podcast today. One, there is a lot of uncertainty in the market right now. A lot of people spreading fear stories here, and a lot of quite frankly, I think there's a lot of misinformation that's being spread. So I want to tell you a little bit about my story, my background, and why I don't think we are in another great recession or another housing crash. Although we've seen here that according to Redfin, excuse me, about 15% of all homes here recently have canceled their contracts and not move forward with buying, and roughly 33% or a third of all home listings here in the Phoenix area have experienced a price decrease. There's so many people who want to say, "Oh, the market's going to crash. I'm waiting for the market to crash." I have a friend who I have a bet with, actually, who bet me that in the next 2 years that housing will drop here by 50% in the next 2 years. So I'm got my calendar marked there to collect my bet on that one. So let me tell you, if you don't mind, a little story, my background, my experience having gone through the actual Great Recession here and the housing market, and how it's changed in the last 10, 12, 13 years, and why we're not going to see a housing crash. So prior to starting my previous property management company at the end of 2008, early 2009, I was working with an investment group here in Phoenix flipping short sales. And so I got firsthand experience on that process and just watching properties, the values just plummet. And I saw how the banks handled that or didn't, and really what the cause was there for the acceleration of the property declines in values here. So once I started my management company, again, early 2009, was kind of the depths of the Great Recession. And I spent a lot of time, especially in those outskirts here of Santan Valley, Queen Creek, Maricopa, Surprise, but even all the way through the valley here. Scottsdale, I had a client that was upside down about $800 a month, held on to her property, and now cash flowing it very well. So what happened was, you go driving around in those, especially those outlying areas where it was like a ghost town. 9 out of 10 homes were just for sale signs, short sale signs, and once people started seeing the decline of properties values, it kind of triggered a reaction, and people started to panic. And I'm reminded of, was it the Men in Black movie where they said people are smart, or a person is smart, people are panicky, stupid people, or what? I paraphrase that one. But we really saw that happen, and I saw so many times and experienced so many times when I'd be showing rental properties where, my first question would be, "So how come you're moving?" And I can't tell you how many times I heard people say, "Well, I'm doing a strategic default." Oh, okay. So my question is, what happened? You're giving up your home. What happened? Did you lose your job? Did you have some sort of major financial event happen in your life that you can't afford the home? And so often I got the response of, "Well, my house just isn't worth what it used to be, and so I'm just going to let it go." And not to get on my soapbox here, but that irritates me. We made a commitment when buying that property, and it certainly we're not expecting to share the proceeds the profits in a property when we do make a profit, which is historically what happens. So the idea that we should expect the bank to share in our losses is ridiculous. But it happened, and it happened, and it happened, and it happened, and people saw that, and it's the same reason why in the middle of the pandemic we ran out of toilet paper. It's the exact same reason why, because as people, as a group, as a society, we're panicky individuals, and when we get in that state, we don't make the best decisions. So what accelerated the fall of property values was, in my opinion, in my experience, was not so much that people couldn't afford their properties. And there was a lot of people that couldn't. There was a lot of events that happened, and I don't want to downplay that. But there was a big portion of people who, again, these quote-unquote strategic defaults. And so the properties were just given back to the banks. People would mail their keys in and just walk away from the commitment that they made. And so what happened then was the banks ended up with all these properties, and banks are not property owners. They're not landlords. They don't know how to run properties, and especially back then they didn't. They had no idea what to do with these properties, and I still continued to work with a lot of agents. I had friends that did a lot of short sales. Everyone was then a BPO agent, an REO agent, and these banks would end up with just strips of properties, and they had no idea how to maintain them, how to get them fixed up and turned and sold. And that wasn't what they do. That's not what banks do. And so they had all these this bad debt on their books, and they just wanted it off as fast as possible. So the banks are responsible for this as well. And what they did was they just tried to figure out how to sell them as fast as possible. They really weren't as concerned about maximizing the value on those properties or trying to minimize their losses on that. It was really just to get the bad debt off the book as fast as possible. And there wasn't buyers out there, right? And so, again, starting in 2008, 2009, when I started my management company, again, we really focused on people that really wanted to save their properties, do the right thing if they had the option to do that. And so, I used to joke when I started the management company that, prior to us coming into the market, there was really only two options if you were going to move. You could short sell or you could foreclose. So we came in, we offered another option, which we termed the unintentional or accidental landlords. Those people that bought that house with the intention of living there, raising their family, possibly retiring there. It was their home. It wasn't really ever something they viewed as an investment. But they either needed to move for whatever reason or couldn't afford it and needed to figure out an option. And for thousands of people here locally in Phoenix, having us lease and manage their property for them became a really good option for them to be able to weather the storm and keep that property, do the right thing. And it's also, on a side note, why I don't feel too bad for landlords now making money on their investments. I spent years and years on the other side of this with landlords in extreme pain because they were not cash flowing their properties. And again, like I mentioned, my client in Scottsdale was $800 a month upside down. And so a lot of those who weathered the storm and are now, making money, and good for them. And I'm happy and proud of those who went the full distance on this and kept it. But getting back to this, so there was so many people that were giving up their properties, that weren't renting them out, that were losing their credit and everything that went along with that. The banks ended up with it and had really nowhere to go. So with those properties, and really before the Great Recession here, it was the landlording game, if you will, was a very mom and pop industry, and it wasn't until this great recession, and a lot of very smart people said, hey, there's a lot of really distressed assets here that we can buy very cheap. We can put money in, we can fix them up, and we can rent them out. And Phoenix just happened to be where that all started. And I was fortunate enough to be a part of at the very beginning, helping some of the largest and first institutional buyers in the country, and again, starting here in Phoenix, to set up their leasing, their management portfolios, and help them acquire more properties. And from there we have some very, very large institutions now that own a lot of properties, and some middle-sized institutions and all the way down. And the individual investor is still a very, very large part of this game here. So now, as this has gone on since 2009, 10, they are buying thousands and thousands of properties. And I know there's a lot of noise in the marketplace about these institutions that are buying so many properties that they're driving regular buyers out of the market. And I hear you. I know it can be challenging. I am a broker and an agent myself, and I do a little work, and my agents do, with individual buyers, first-time home buyers, and so we have experienced that pain firsthand. And it's definitely challenging. But they're not all bad, and this is why they're not going to be bad moving forward. Again, when we had the issue last time, and again, that downward spiral is because there was no bottom for that. No one was buying properties. No one had the cash set aside. And in the last 10 years, it's become very institutionalized. If you look at multifamily in the 80s, it was very mom and pop until the institutions looked at that and said, hey, we can consolidate this, we can make this work, and we can make money on it. And then in the 90s, 2000s, you started seeing it with self-storage. Same model. In fact, one of the guys who did that in self-storage was also one of the pioneers in the single-family rental space of institutional buyers. So I have a very good friend of mine, a former business partner, who is very involved in the institutional side, and he and I talk very regularly. And the company he works for now helps institutional investors, buyers, identify, offer, and buy on properties, and then they have the management side and everything else. And the biggest problem that we talk about all the time is these institutions. They have billions of dollars. The biggest problem that they've had over the last couple of years, and I speak with a lot of them through my coaching and consulting as well, that the biggest problem that they're experiencing is they have so much cash they can't get into the marketplace. Which is why you're seeing, here in Phoenix, again, I mentioned on a previous podcast of a different friend of mine who represents a lot of institutional buyers and buying in the 3 to 4 cap rate now, which, again, sounds crazy and why you need great renters. But they're buying at such low cap rates because they have to get their money in the marketplace. Again, billions of dollars. So I say this to say, for those that think the market's going to crash and want to relate to our most recent pain that we've experienced, and for a lot of us, it's all we know. I'm certainly too young to remember the housing market in the 70s and into the 80s when rates were 18%, and what that did to the market. And it's cyclical. It's the housing market, all markets are cyclical. Instability is stability. And so, we shouldn't be too surprised at this. It's actually way overdue. But so when these properties start to go, and we're seeing it again, we're seeing, with interest rates going up, it's unfortunately making it harder for individual buyers, owners to qualify for as much property, which is why we're seeing the cancellation of contracts at the rate that we are. But they've got billions of dollars sitting on the sideline, and with the rental market here in Phoenix, it's still increasing, and it's still one of the hottest markets. I believe it will continue because we have a massive housing shortage here that's going to continue. And on that note, too, one of the reasons why we're not going to see, in my opinion, that change is because as it did in the Great Recession, is because there were so many people that, kids who went back to move with their parents who moved in with their kids, and consolidated a lot of households that I just don't believe we're going to see this time. And it took a long time for those families to kind of separate, if you will, for the kids to go back and buy their own home, or parents to do that. And a lot of them had a lot of scars with that. If they did the short sale or foreclosure, they obviously affected their credit, their ability to buy, and so they just didn't have the ability to buy. But I don't see that happening here. And again, Phoenix is growing at a very high rate. It's the fastest growing city in a major city in America at this point, and people are moving here. What is it? A couple hundred people a day on average, 215, give or take, something like that. So we're going to continue to see a need for housing, both in the single family and multifamily space. And as soon as those prices start dropping down, as soon as there's a little bit more inventory, we are going to see these institutions that have been sitting on piles of money on the sideline, frustrated that they can't get their money in the marketplace, that they're going to start putting their money in the market. And there's too much money out there. There's too many buyers that they're not going to let it drop. My prediction is we'll see somewhere maybe 20%, and it's gonna hit and bounce right back. I've got had a conversation not too long ago with someone who said, "Hey, I'm gonna wait for the market to crash, and then I'm gonna start buying properties." I said, "Well, keep waiting." And this was before interest rates even went up. And you'll know this because I'm going to talk about Zillow instant offers. And this conversation happened right before Zillow announced that they were initially pausing buying more properties, and quickly came out with the announcement that they were completely shutting down their instant offers, their competitor to Open Door Offer Pad. And Zillow at that point had about 7,000 to 8,000 doors that they owned, that they were in the process of getting fixed up and sold, with another roughly 8,000 that they still had under contract that they at that time were going to honor their commitment and still buy. And so the thing is, most people probably don't know much about this story. And the reason why is those 15,000 properties that they owned, for the most part, didn't hit the market. This was last fall. We still had a massive housing listing shortage on the MLS. And those properties, thousands and thousands of properties never hit the open market. Within days of Zillow making the announcement, they sold almost 3,000 doors to an individual private investment group who bought them for, at that time, what they said full value, full price on that. Didn't even try to buy them at a discount because they couldn't, because there were so many other institutional investors out there that were trying to buy those same properties. And so they moved almost 15,000 doors without anybody knowing it. There were some that hit the market. There's the outlier properties, probably some of those that Zillow shouldn't have bought in the first place. But those bread and butter ones, they moved. And so we're going to see that again. As soon as properties start coming down a little bit, as soon as that inventory starts to, and it is, we're seeing it. We're seeing a lot of inventory hit the market, and it's going to get scooped up here. So I say all this too. So if you're a seller, if you're trying to be a seller, if you're a real estate agent who represents sellers right now, and maybe you just had a property go under contract, and maybe that contract got canceled. Maybe it had to do with the financing on the buyer side. Maybe the buyer just got cold feet. Or maybe you listed your property because you're going, hey, it's a great market. I'm not trying to sell the property, but I see how much money I can make, and why not, right? I sold a lot of houses the last couple of years just because people saw how much money they could make and wanted to capitalize on that. So, in fact, I've got a couple listings right now that we kind of missed the boat on. We're listing some now, some about to come up too, that we're going to list them on the high end and see what happens. But again, 33% here of all listings here in the Phoenix area, according to Redfin, have seen a price decrease. So if you're in that boat too, where you're saying, man, I loved the idea of selling this at the top of the market, but if I have to continue to take a price decrease to sell this property, maybe that's not as appetizing of an idea that it was. So I say all this, and where I started with the unintentional or accidental landlord. Now, we're not in a position, for the most part, maybe some of you are, but very few, where we're actually legitimately upside down in our properties, where the property is worth less than what we actually owe on it, which was commonplace, right, in the Great Recession. It was a big issue, and so people, again, didn't have the option to sell outright. And so it's a different level of pain today than it was back then. But if you are frustrated or maybe trying to figure out another option, if you can't get that property sold, if it keeps coming out of escrow, if you've considered maybe renting it out before or renting it out, maybe you have. If not, like I said, I've done this thousands of times here out of the Great Recession. I've seen us come all the way through to where we have a lot of equity in our properties, and they're cash flowing very, very well. And so I'd like to encourage you to explore. Talk to your agent. If you're an agent, talk to your client about the possibility of renting it out. I believe the rental market, again, is going to stay very strong. And it's a great way to hold on to that property. Now, a lot of people, too, are going to tell you if you need to buy a property, well, I need to sell my other property in order to get the down payment for the new house. In some cases, that might be true. And so I never speak in absolutes. That was a joke. But for the most part, we have enough equity in our properties. So if I can tell you a little quick story as well. My wife and I just got married almost a year ago exactly. So we've been married for almost 1 year in a row. So when we got together, she had a house here in Mesa, and I sold my house. We moved in together. And in January, we bought what we hope to be our forever home. And so the house that she had bought in 2017, bought brand new, bought it for about $270,000. And by January, it was worth $450,000. And so the house we bought was quite a bit bigger and quite a bit more expensive. But what we did was we took a HELOC out on that house, and we used that money as a down payment for the new house. and we rented out the house that she had. That house is cash flowing even with the HELOC on it at about $1,000 a month, which is absolutely fantastic, and we love that cash flow. But the greatest thing about that is we were able to buy our dream home with literally no money out of pocket. Now, it helps that I'm a broker. I got a commission on that to cover all of our closing costs too, so that helped a lot. But my point in this is, if you think that you have to sell that house in order to buy the new one, I'd encourage you to look around, maybe talk to a couple agents, talk to a couple lenders to see really what your options are. I've got a few friends who are real estate agents who also invest in properties, and I'm going to have a few of them on to tell their stories as well. It's just some great people. And it's funny, one of the common things that we always say every time we get together is all the houses that we've sold, our own houses, our own investment properties over the last couple of years, and how much we regret selling those houses. Now, we've all got a couple houses we're happy that we moved out of and got out from underneath. But for the most part, especially these last couple of years, man, I can't tell you how many houses I wish I didn't sell. And a lot of those agents that you're going to hear from have recommended that their clients don't sell when moving up or moving down. And some of them have done the management themselves. Some of them have helped the client do their own management, and I'm happy to help with that management and leasing, as well as we really put a focus on finding great renter partners and take a lot of that uneasiness, the pain, uncertainty out of leasing out a house that maybe you bought that you never really viewed it as an investment rental property. I know there's it's a little bit different of a mindset when somebody else is moving into your home as opposed to buying a home as an investment. And so I'm very well versed in that. I feel the pain associated with that, but I've also seen the other side of that, and how many clients that I've been able to help over the last almost 15 years now to save their home, to save their credit, to save their legacy. And so, again, I don't see the market dropping dramatically, where it's going to take a long time to get back to that baseline of where we're at now with the value. And again, I said this back in the day, and I'll say it again today. If your property is worth less today than it was, yesterday, it's only a paper loss until you realize it. And so, if you're not needing to sell that property, don't realize the loss. Hold on to it, cash flow it, make some money on that property, and let it work for you. And that property over time will continue to appreciate. I can guarantee you that over time it will. To what degree, I don't know that, but it will. So if you're thinking of it, let's talk. I'd love to talk to you. You can give me a call, 602-691-6918, or Donovan, Donovan, at myinvestdoor.com. If you're an agent, I'd love to talk to you as well. If you've got a client that has a property that you're struggling looking at all the options, I'd love to just have a conversation. I'm not trying to steal your listing at all. I'd love to just see how I can help. I'd love to hear in the comments on this one too. There's a lot of different thoughts, feelings, emotions, uncertainty in the marketplace right now. I'd love to hear whether you are a current investor, whether you're a current homeowner, trying to figure out what your options are, or if you're a real estate professional, what you think the market's going to do, where it's going to go, how it's going to come back. I'd love to have a conversation about that here. So hopefully this story here, my experience coming through this, I've seen the lows, I've seen the highs, and I've seen where we are now. Is it a low? Is it a high? In the middle, it's hard to say. But
Thank you for listening to Doors by Donovan with Donovan Reese. If you're interested in learning more or helping transform the property management industry, please follow and support the show by rating us on your favorite podcast player. Engage with us. If you have ideas or questions, send an email to donovan@myinvestdoor.com or visit our media page at www.myinvestdoor.com. We'd love to talk about your question on the show. This has been a T-Door production. Theme song by Nefix.